Hi everybody, it's me, Gregory Mannarino. How are you today? And welcome to the second segment of my trade game platform. I really hope before you even watch this video, you go back and watch the first segment where I covered some really important information there. It was titled Essential Options Basics 101. It's really important to get that down first and then move on to this particular video. So with that said, hoping you've moved past that first video, let's talk more about options here. This is where I believe there's a lot of confusion when it comes to options trading here. In the money versus out of the money. What is this? Some kind of a new language? Actually, it is. All of this is a vocabulary which needs to be understood. But when we're talking about options here that are in the money or out of the money, we need to discuss risk, okay? Because all of this comes down to risk. And a lot of that is a personal choice, and some of it has to do with how much capital you have to invest. Let's start with in the money. An in the money call or a put has less risk than an out of the money call or a put. Let me go over the intricacies a little bit further here. If something is in the money, that means the option already has value. For example, let's say you're looking at July 50 calls on stock XYZ. If you were to buy an option with a strike price of 50, July 50 call, and the underlying asset was already at, say, 51, you're already in the money. You understand? Because the underlying asset is already at $51. You're buying a call with a strike price of 50, so you're in the money already. So your option has real value, not just time value. Understand? Financial instruments, options, have a time element to them, and this is why they have an expiration date, in this case, July. You understand? Okay, now, an in the money option has less risk. Why is that? Well, as you get closer to its expiration date, because you're already in the money, the option has value. You got it? If you're out of the money and you do not hit your strike price, your option can expire worthless. We're never going to let that happen, okay? For some reason, a lot of traders will hold on to these things until they expire. You'll almost never do that. At least I never do that. I always look at where my position is going. I kind of babysit these things, and we'll talk more about that down the line. Let's talk about why someone might want to adopt an out-of-the-money strategy. An out-of-the-money strategy basically works like this. You're buying time. You're buying time hoping that whatever asset you're looking to purchase here as the underlying will hit its strike price. You got it? So let's put another example on this. Let's say you're looking at a July 50 call on underlying XYZ. Now, if the underlying XYZ is below 50, you got it? You're now buying an out of the money call. These are cheaper, but they can also have some pretty wild swings here. Now, again, there are reasons why you might want to buy an out of the money call or a put. Again, if you want to look at this in the terms of a put, it's just the opposite, okay? So we're looking at a call here on company XYZ, which is out of the money. Basically, you believe that the underlying asset XYZ is going to make a large move here. And once your out of the money option goes into the money, you're going to make a substantial profit. Now, it also works the opposite way too. If you buy an out of the money option and it goes down or against where you believe the underlying is going, you can lose more money quickly as well. You understand? Now, there are ways around all this to make options work for you where you can minimize your losses and maximize your gains. I talk about this all the time on my business day market report. Now, if you're following this trade game, you need to really consider following my business day market report, because it's not just a matter of picking stocks here or picking an option or picking a strike price or an expiration date. It's about understanding where the overall market is going, and that's going to play into whether you're buying in the money or out of the money as well. So if you just to break this down very, very simply, an in the money option has less risk than an out of the money option, but an out of the money option can pay off bigger if it works out the way that you believe it will go. Now, with regard to trading here, I'm going to give you a little tip. Never ever go all in on any one trade. What you will do initially is take up a small position. Let's say, for example, you're buying, let's stick with the July 50 calls, a July 50 out of the money call on XYZ here. You will take basically half of whatever capital you want to allocate into that position and take up that spot. Now you will watch this. If the underlying moves in the direction that you believe, you will add to that position as it moves in that direction. If it goes against you, you will simply close that position and only sustain a small loss. If it goes in the direction that you believe it will and you add to it incrementally, you will maximize those gains. Now let's talk about this. When you have options, you have an unlimited gain. Well, not on a put. On a put, you have a limit. But let's say you're going on a call. You have an unlimited gain, but you have a limited loss, because all you can lose is the price of the option and any associated fees. That's it. That's what makes options trading so beautiful. You can limit your losses, you can maximize your gains. And let me tell you something else. You can be wrong more than half of the time trading options, the way I just told you, taking up a small initial position and adding to it or closing it with a small loss. You can be wrong more than half the time and still make cash. Interesting thing to know. I think it's important to know. All right. I'm going to end this segment here, and I will do another one in about a week from now. So I hope this has been informative for you. If it has, please hit that like button down there, share this video, and seriously consider following my Business Day Market Reports. You can put all this together for you. Check out my website as well, traderschoice.net, where I actually post my positions there, and I talk about them more at length during my Business Day Market Report. With that said, I'll see you all next time. Take it easy.